Happy Tuesday. We are on Tuesday, right? I think last time on Friday I was saying happy Monday and it was Friday. So, thank you everyone for coming. Please make sure if you're hungry you get some sandwiches and some drinks. Today we have John with us. John joined us a couple months ago. I think he was there at my first meeting, and Arestas invited him in to talk about. John is a mortgage broker and he's also a lawyer. He's been in the business for 20 plus years.
Yep.
So today he's here to talk to you guys about mortgages. I think we're going to do a mortgage 101 type thing with some basics. So thank you again all for coming, and I'm going to turn it over to John.
Yeah, thank you
Thanks,
very
John.
much for organizing. Thank you. So my last name is Cocomile, often mispronounced. I'm an independent mortgage broker. So I was just parking my car and I called my partner. He had ordered some of these neat little things for clients or realtors. And I opened one of them up from the package. And the note says, "Many solutions exist for your clients' needs, but only a few will serve their interest. Allow us to help them solve this puzzle." So I'm going to pass this around. My question to my partner was, is this a joke? Like, can you actually solve this? And he said, oh yeah, there's 3 different ones and they're all solvable. So I'm going to pass it around and suggest each of you take a few minutes and see whether you can figure that out. Okay, there's a marble, a little marble in there that apparently comes out.
It's difficult for you. Well, it's difficult for you.
So, of course, everybody help yourself to some food and coffee. As I said, I'm an independent mortgage broker, and I've been in the business a lot of years. I just thought it would be great to maybe shed a little bit of advice from my perspective, or a little bit of information, I'll call it, from my perspective. Things that I see and things that come up, sometimes very close to closing, that could be avoided. And really, I'm going to just touch on a few things and then we'll dig right in to a situation. But I just feel like if we could know just a little bit more about other things that happen when a deal is coming along. For example, a question like, well, when do I get a land transfer tax rebate? When does that come to me? How much is the rebate? Assuming it's a first timer. Can I use RSPs for down payments? Little unknown fact that you don't have to be a first timer to pull money out of your RSP tax-free. I didn't say that wrong. You don't have to be a first-time home buyer to participate in the RSP home buyers plan. There are loopholes that are available if somebody maybe doesn't quite have a big enough down payment. Maybe they can tap into their RSPs even though they've already owned real estate. So there's certain things that can come up, and I was talking to Aresta about it. I just gave her an example. What if you're with a client and your client says, geez, I really didn't want to go over $700,000. What would it cost me to borrow an extra $10,000? What if my mortgage is $10,000 more? Well, the answer is $50. $50 a month on every $10,000 you borrow. That's an approximate, but wouldn't it be great to be able to tell your client who's being forced to maybe pay more, borrow more than they thought, it's only $50. It's a couple of friends at a Starbucks a month. That's all it is, assuming you qualify. So I'm going to just delay and avoid this little presentation for a little bit longer because, truth be told, I'm waiting for it to be sent to me as an email. So anyway, my point is, I think there's some things that we can think about that are maybe a little bit outside of the box that can help us be better realtors, that can help us answer questions instead of having to say, you know what, I don't know, but I'll find out for you. Wouldn't it be great if you could say, it's an extra $50 a month? Or your land transfer tax rebate is $8,400, and if the lawyer has you fill out the right forms, you're going to get it up front. You don't have to pay for it and wait for it. You get it up front. So just a couple things as an arranger, mortgage broker, or a bank. You may realize that lately the broker is asking for the full version MLS as opposed to the version for the purchaser. The full version MLS obviously shows the name of the seller and details regarding the property, whether an inspection report is available ahead of time. So lenders are asking for that now, and also when a purchase agreement comes in, the schedules need to be attached, even if it's a Schedule B, just the standard Schedule B, the lender requires it. Otherwise, they're usually going to require an amendment, removing that schedule from the purchase contract. So these are just things that can make you a little more efficient, effective. Every time you can touch somebody like a broker or a lawyer, you're increasing the chances of maybe starting a relationship with that person that could result in more referrals. So if you've got clean deals and your purchase contract comes through and there's a broker version MLS and broker's not always asking, that gives off a great impression to the broker. Hey, this realtor knows what they're doing, they're busy, they've got good deals, they've got big deals. I want to meet with them and I want to learn more about what they do, because I get a lot of first-timers that come to me. And I can say to them, do you have a realtor? No. Let me say, what's the name of your realtor? Who's your realtor? Because everyone has a realtor, but when you ask them, who is your realtor? They can't answer. Well, my mom works with somebody at work, or I have a cousin who just got their license. No, hold on for a second. I want to refer you to Joe. He's good. He knows what he's doing, and guess what? He excels in Bloor West Village. Your aunt hasn't done a deal, doesn't know what a schedule to a purchase contract is, let alone how to deal with an offer night or multiples or whatever. So hopefully you're just getting a sense as to some of these issues. You probably know them all already. I like to have the conversation with the client early and suggest the same for you. Hey, if you're going to make an offer on a place, yes, it's one thing to be pre-approved, but do you have some cash available for a deposit? Because if all your money's tied up in an RSP and we're at offer night, and you say, well, I got $400 in my account, but I could, in 10 business days, I could come up with 20. I think you need to deal with that early on and say, look, here's the deal. If we're going to work together, we need to know, A, are you pre-approved? B, do you have cash available, whether it's a line of credit, a family member, whatever? Because when we go to the show, I know things have cooled off a little bit, but we're going to the show. We can't show up with a $200 deposit and another 20 coming in 10 days, because you're not going to get past the first round. Would you agree? Mm-hmm. So does anybody have any questions about some of these little topics that I've touched upon? Does anyone think I'm crazy because I said you don't have to be a first-timer to participate in the home buyer's plan?
I want to hear more about that.
Pardon me?
I want to hear more about that.
You can't own a property when you participate again, and you have to have paid off that loan to yourself before you can participate again. And then the other requirement is a little bit of a technicality, is you can't have lived in the property you own or owned for the last 4 years. So technically, you could own a rental property and still be a first-time home buyer and pull money out of your RSP tax-free. It's just to help somebody get to 5 or 10% or whatever they're trying to get to qualify for the next purchase.
A question came up recently in the office about a mortgage broker wanting a PDF of the listing. What's that about, do you know?
It's probably like when you see listings, you can access the MLS, right? So we can't. Oftentimes a client or a realtor will send me a link to a listing, and hopefully it's a link to the full broker listing, and I click on the link and it opens up, and then I can choose to save it or print it. I would normally save it as a PDF. So probably some lenders require a PDF instead of a Word document. You could save it to a Word document, but a Word document you can delete, or you can change the tax number, or you can maybe add a second bathroom or a finished basement. You could doctor up the MLS. So the reason that somebody requested a PDF is probably because it's harder to change a PDF. Any luck?
No, I can't even see the little, is there a little ball in there?
There's a ball bearing in there. So that's probably the reason that mortgage agent or bank received a Word document of the MLS, and the bank said, no, this has to be a PDF. So if you have Adobe Writer or Adobe Expert, whatever it is, then you could just save it as a PDF.
You don't even need that anymore. Now you can just print, most computers will give you the
Print
option
to a PDF.
print to PDF.
Right.
But it's like, the MLS can always be changed, right? So if you just send somebody a live link
No,
to the
you
MLS.
can't. That's why I'm confused, because it really is a document that, as far as I always knew, can't be changed, because that's exactly that. You can change the lot size, you can change.
You can. No,
I think you can.
You as the listing
can,
agent.
only as the listing agent, yeah.
and I think that's why they want a PDF, because once they receive the PDF, they work off that PDF and they can prove when they received it, and all the work was based off of what they received. Because then if you go back and change on the MLS, you can say,
that
I
makes
received
sense,
it as
actually,
this.
yeah. Because in this case, it was a problem deal, where the agent sold a property that ended up only being half the size of the lot that was, you know, so.
So, okay, I'm gonna dig in, and I'm not even gonna use the PowerPoint. But another question that might come up is an appraisal gonna be required for this purchase? How do you answer that question? Does anybody know when an appraisal is required?
By the banks only.
Right, the banks may require an appraisal, but does anybody know when the bank requires an appraisal or when they don't? I'm just anticipating questions that your client might have, and you could address those questions instead of saying, well, I don't know.
Before the commitment letters.
Okay, I'm not asking when it's required, I'm asking whether it's required.
Oh,
Yes, so when no insured mortgage.
Okay, that's awesome and it's perfect.
based on the LTV?
Yes, so if a mortgage is CMHC insured, now you're not going to always know that as a realtor. You don't know the size of the down payment. But the reality is, if you've got first timers putting down a small down payment and borrowing 90 or 95%, then 9 times out of 10, there's no appraisal required because CMHC and Genworth and Canada Guarantee, there's 3 of them that insure mortgages. There's 3 companies that insure mortgages. We all call it CMHC the way we call it Kleenex, but there are 3 of them. They have very sophisticated models for evaluating properties so that there's no requirement for an appraiser to go out and take photos and confirm that the property is what's disclosed on the MLS. If a purchase is private, I don't think any of us really care, but there's always an appraisal required because there's no protection that the whole MLS process affords us. But if a mortgage is insured, and that means if somebody's, generally speaking, if somebody's putting down less than 20%, then an appraisal is not required. And interest rates are lower. Isn't that funny? The smaller the down payment, the lower the interest rate. How crazy is that? You would think bank would say, that's a higher risk mortgage, I'm going to charge more, but bank says, I'm protected because the insurer will make me whole if there's a default, so we can offer a lower rate. Okay, so bang on, it's all about loan to value. Now, if you're outside of the spectrum of, let's say, houses on Maria Street, I think it's just north of Dundas and east of Kiel, or east of Runnymede, if the first house on Maria sells over $1 million and there's no other semi on Maria that's sold for $1 million, regardless of size of down payment, regardless of loan to value, CMHC might say, we're not comfortable with this value. It's listed at $849, paid $1,049,000. There's never been a sale on Maria for over $1 million, so we're going to send someone out there and do an inspection and see whether, in fact, this value is supported. Now, a whole other conversation, what if the value is not supported? Okay, let's not go there right now. You might have experienced that before. Somebody pays $1,049,000, property appraises at $950,000. Now what?
Sure.
Can we go to Canada Guarantee or Genworth maybe? Can we go to another lender? What's our obligation as a broker when we know that an appraiser's gone in there and valued the property for less than the purchase price? Another conversation for another day.
Another day.
Another day.
Well, we can go there if we want, but what do we got here?
I
for
want to
time?
know, as a realtor, can I actually influence that decision with comparables?
You can certainly try.
Okay, well,
we
that's
see
what
it all
I've
the
been
time.
hearing, not that I would do it,
Yeah.
but I've been hearing that some people have the power of influence to say, or to
Well-
prove, not say, but prove.
Yeah, what about this comp, or what about that comp? Well, what's happening with valuations is the date line for comps has become very small. We can't go out 6 months. We can't go to a May 2018 sale in November because it's too far away.
Correct.
And it's almost like appraisers 2 years ago were able to justify increasing values at the rate of 1.5% a month. So if there was an exact sale on Maria Street in April 2016, got to go back far enough, and then we go to November 2016, if we don't have a comp to justify the value, appraiser can say, look, these two sold here for $800,000. We can add 1.5% a month, and I can legitimately support a value of $825 in November, 6 months later. So just the way that was happening then, it's now almost the reverse, where appraisers saying, we're going to drop the price. If lender says, if I'm not going to accept that May 2018 sale, appraiser's going to say, okay, well, what if I reduce the value by 1.5% each month from then until now? Then will you accept it? Chances are that's not going to it's not going to serve the client well. But, okay, so, look, I can stick around if anyone has any specific things to talk about, and I've only got about 10 minutes left. I really appreciate you taking time to do this, to sit here with me. So far, no luck. So, just, it's going to be hopefully a little easier to listen to me because I'm not going to have distraction up there.
I just have a question about using a CMHC or general insured mortgage for an investment property. Can you do that?
Will CMHC insure an investment property?
Mhm.
And we're saying CMHC, whether it's CMHC, Genworth, or Canada, and they have some
Any
different
deposit
rules.
under 20%.
Depends on.
So one of the new rules Jim Flaherty brought in was minimum down payment for a rental property is 20%. CMHC is out of the game if the purchase price is over $1 million. So we cannot get an insurance on a purchase over $1 million. So minimum down payment over $1 million, regardless owner occupied or rental, is 20%. And then when you get up north of $2 million, things change a little bit more. But CMHC may insure a rental property when a deal's kind of marginal. Maybe credit's not great, or somebody's just starting a job. I have a client that just moved to Windsor, bought a house there, working in Detroit, commuting every day. They're a medical technician, and the commute and where's the income declarable, etc. Go to an A lender as opposed to an alternative lender, and say, look, 20% down, why don't you CMHC insure this? Client's okay to pay the premium, and let's get the client the A rate. So CMHC will get involved in certain cases, but minimum down payment for a rental is 20%.
I have a question.
Yeah.
Here. I have a client I referred them to a mortgage broker. She came very highly recommended. We're putting an offer in. The client is saying to me, well, we only got one mortgage broker. Maybe we should look and see if we can get a better rate than somebody else. My answer to that was, well, one mortgage broker probably knows what the going rate is. What's your answer to that?
Just going to download this here, and I'll answer. So I guess the question is, if one broker quotes a client certain rates, does it make sense to shop around to another broker? Yeah. And really, the answer is, we all access the same rates. Some of us that do higher volume can get special deals. We get volume bonus, so we can give up some of our commission to offer a better rate. A little easier if it's a bigger loan versus a smaller loan. But one independent broker, in my opinion, is the best person to refer to, because that independent broker is free and can go to TD or Scotia or First National or Tangerine or MCAP or Merrick's or any one of 20 lenders, versus the Scotia broker can only go to Scotia.
Yeah, and but she would be, this one woman that I referred would be with a company, with a mortgage brokerage. She's one individual in the mortgage brokerage, so so in that case then, as long as she's not attached to a bank, she would be giving the same information any other mortgage broker would be giving her, with a little bit of...
Nothing wrong with being attached to a bank, but if you want your client to have access to many different lenders instead of just the bank, then an independent broker would make more sense. Easy for me to say, I'm an independent mortgage broker. But you go to the bank, let's say you've got a connection at TD and you refer your client to TD. What's TD going to do if 2 weeks before closing Tangerine's having a sale? I don't think they're going to call them and say, hey, great news, we can get you a better deal. Well, you can get a better deal, but you got to go across the street. I mean, that's the best, my favorite thing about being a mortgage broker is calling a client and saying, guess what, we were just able to get you a better deal 2 days or 2 weeks before closing. But anyway, enough about me. The new mortgage rules, okay, I think it's really good that the theme here is, how can we serve our clients better? How can we understand this other part of our business, which is very related? So it's hard to understand, and one thing we all know is it's harder to get a mortgage now than it was 2 years ago. So Joe, that qualified for $600,000 2 years ago, qualifies for $450,000 today. That's a fact. The government has imposed these rules, and everybody is bound by them. So 2 years ago, let's just say the interest rate on the mortgage is 3%. Joe could borrow $600,000. Today, even though the interest rate is still 3%, we have to use the benchmark rate, which is 5.34%. So even though Joe's mortgage payment is only $2,400 a month, we have to qualify Joe as though the mortgage payment is $3,200 a month.
That's what prime plus 2, right?
Well, there's two options, right?
Yeah.
Prime plus 2 or UC rate.
There's the
Whichever's
benchmark
higher.
rate, which has gone up 1% in the last year.
Yeah.
It's now 5.34.
Right.
Or there's what they say, the contract rate plus 2%. So the benchmark rate is used to qualify variable rate mortgages. That's 5.34%, even though the actual rate would be closer to 3%. The fixed rate plus 2% is required to qualify for a fixed rate mortgage. So if the fixed rate's 3.5%, you need to qualify based on a payment on 5.5%, even though your payment's only 3.5%. So it obviously, the number of buyers has decreased. Clearly, it's become so much harder to qualify. So how do we deal with it? Well, we use credit unions that aren't bound by the new rules. They're not federally regulated, so they're not bound by it. They charge a premium. They know they charge a little more than the 3.5%, let's say, that the bank charges, but at least you can get the deal done. Or we used to call them B lenders or alternative lenders. Now we call them non-conventional lenders. We use other lenders that don't need to comply. They can take a letter saying, look, even though my notice of assessment shows $70,000 of income, I really make $110,000. Here's my financials, and I make $110,000 based on revenue of $180,000. So there's ways around it, but it's tough. It's a lot harder to get a mortgage today than it was 2 years ago. And the first change was only for CMHC insured mortgages, and then the last round was for non-insured mortgages as well, regardless of loan to value. So whether you're buying $1 million house and putting $300,000 or $400,000 down, or whether you're putting 5% down, actually you can't put 5% down on $1 million, let's call it 10, you still have to comply with those ratios, and it's all about serviceability. Can you make the payments if rates go up? So anytime I do these presentations, I always like to try and get people more involved, and I always just blabber on nonstop, and I apologize for that, but I am truly passionate about what I do, and I really think this information can make you more effective, even if it's just a little thing here and there. There's a couple of little things off topic here. A friend of mine is a realtor down in Scottsdale, Arizona, and I met her for coffee a few weeks ago, and I said, like, how's the market? You know, how are you finding it? And she said, oh, the work's there. You just got to go out and get it. The market's quite flat down in Arizona. And the work is there, like, you got to go out and get it. So if you're not mining your database or cold calling or knocking on doors or whatever it is you can do to try and get the phone ringing, then you should probably be doing some research and learning what's selling, what isn't, how much did that place sell for, what's the difference between that place and this listing that I'm trying to get. Easy to say, but it's true. Like, we're salespeople. We've got to be moving to get the phone ringing. And I think with a little more information, what's the minimum down payment on a purchase of $1 million? Well, does anyone know?
You just
You
said
said 10,
10.
didn't you?
No? I did say 10, but it's not 10.
So it's 8.
20?
It's 5% on the first 500.
Yeah, it's
Oh, right.
scaled. It's
So
scaled.
that's 25,000 on the first 500, and then 10% after that. So it's 25,000 on the first 500, and then 10% of the next 500. So it's 75,000. So, like, just to be able to answer questions like that, I think make you just a little more whole. I know it's not your skill set, but why not know it? Right? So, if you like, maybe you can just put your name and email address on here, and I'll include the 8 or 10 or 12 little things that I said today, and hopefully you can get 1 or 2 of them can help you. For you, if you like, I can focus a little more on the home buyer's plan, but it's a fact that you can't participate more than once. There's different definitions for first-time home buyers.
After 5 years, you're considered a first-time buyer again? Is that not right?
Do you live in your house, the house that you own?
I've never lived in it, it's a rental.
So you probably could tap into RSPs
I have
again.
been a first-time home buyer previously, though,
Right?
many years ago.
Yeah, you probably would qualify.
And it's paid off.
It's not like it's a huge windfall. It just means you're allowed to pull up to 25,000 out of your RSPs. The government doesn't say, and we'll throw another $5,000 into your RSPs for you. They just say, we'll let you pull your RSPs out tax-free, pay them back over the next 15 years.
What about
So you
land
can-
transfer tax rebates?
You can only be a first-timer once, and you cannot have owned real estate anywhere in the world.
In the world.
And you have to own or occupy, you have to occupy the property. So the rebate became much bigger, right, effective Jan 1, 2018 for first-timers. I think it's $8,400. It's much bigger now for first-timers than it was in Toronto, right? Not outside of Toronto.
Don't they match municipal? Because you get provincial and municipal, which are the same, roughly, and then they give you half back or all of it back?
It's a scale based on the size of the purchase.
All right.
So, but like I said, it's between $8,000 and $8,500 that you would get back, assuming that your nut is bigger than that to begin with, right? So, I know on $1 million purchase, land transfer tax in Toronto is about $35,000. There's calculators all over the place. So I got up early this morning and I prepared. I wrestled over a PowerPoint presentation and how do I put my logo here, and I can't, and then I actually retained somebody at 10:30. I flipped them my draft and said, can you please clean this up for me? I've got to speak to some people at 11:30. So I see it just came through at 11:45, but so much for that. Has anyone solved the puzzle?
No, we need help.
Probably
There's a
another
tool.
piece.
I don't know how to, there's no tool, and I don't know how to solve it either.
There's
I
a
was just
tool.
talking to my partner saying, oh, they're all, yes, you just have to work through and,
I don't know.
There has to be a tool.
so did
Called your
it,
brain.
did I go too quickly? Like, did you find this helpful?
Yeah, it would have been nicer if it lasted a little longer, but it was good.
Like, I'm happy to stick around. I'm friends with Aresta's husband, and Aresta called me 6 or 7 weeks ago. She had a deal going sour at the 11th hour, And I was just trying to help her as a friend to see whether there's no point trying to get financing in place for the closing tomorrow or Monday. But I think, just as I think about it here, I remember doing my first deal as a mortgage broker and just waiting for my commission check. Oh, it's going to come next week. I can't wait. And I was just sort of sitting on my hands waiting for the check. And another mortgage agent in the office, I said, oh, I know I'm going to get my commission check next week. It was like $2,200 or something. And they said, oh, have you been in touch with the lawyer? Lawyer? No. Sometimes, follow up, you got it. So wouldn't it be great if you could prep your clients, say 2-3 weeks before closing, say, hey, look, if you haven't spoken to your lawyer, reach out to them. They're going to need confirmation of home insurance, and they're going to need identification, etc., and then maybe a little note to the lawyer, not saying, is my check ready for pickup, but saying, is there anything you need? I love reaching out to the lawyer. There's another touch. Lawyer, I understand you're acting for Mr. and Mrs. Smith. I've arranged the financing for them. If there's anything you need, purchase contract, whatever, sometimes they're selling, I can send them details of their existing mortgage, so facilitate the lawyer in requesting a payout statement. But the more involved you can be, you're serving your client. Instead of just counting the days like me, waiting for the check. Now, hey, I've worked with that lawyer before. Hey, it's Anton Brunga. I think he's up here. Anton Brunga he's a friend of mine. He's taking a session in a couple days, I guess. But so I reached out to a client. The lawyer was Anton Brunga, and then a couple weeks later it was Anton Brunga. I called him. I went for lunch with him. I work with him now. He sends me business. I send him business. How easy was that? It's networking 101. At the same time, you're serving your client because you're making sure, hey, we need a notice to vacate. Lawyer doesn't know who to reach out to. Realtors just sitting on the hands waiting for the check. So I think we can all be better at it. All of us can be better. And I'm sure there's some very seasoned realtors in here, but we can all be better at serving the client and at the same time increasing our volumes. I was invited by Aresta to the meeting at Lambton in September, and I thought it was a joke. I could not believe the culture of Keller Williams. I honestly thought it was a joke, like this is a timeshare sales pitch,
It's a cult.
or something is going to happen to me. I couldn't believe how and everyone that came up to speak was well spoken, and they all seemed to care. I mean, this is a commission business. It can be cutthroat. I couldn't believe how supportive everybody seemed. And frankly, the broker owner, I can't remember his name. Norm. I sat beside him, and afterwards I said, this is unbelievable that you have this kind of culture here. And it's unique, it's different. I spent a lot of time with realtors, and I think you're all personally very fortunate to be in this office. So
I think we would all agree.
nobody figured out the puzzle. I've got a few goodies up here, a couple of puzzles as well, if anybody's interested. And I really appreciate you being so patient and hearing me babble.
Thank you.
Does this start? Thank you.
Pardon? Sure, yeah, I've got some cards here.
Obviously sales are changing, so you're talking about volume. And so right now, do you see what's picking up for you? Do you see a lot of commercial, assuming commercial is easier to finance? Are you seeing a lot of commercial, residential picking up on your end?
Most of my business is, it's become existing homeowners that are looking to, thank you very much, existing homeowners that are either consolidating or looking to buy a second place. I don't really see the commercial world. I do think, thank you, I have, well, my wife has a property in Bloor West Village, and anyway, I was just there this morning. We're getting ready for a new tenant moving in on the 15th. And rents are a beautiful thing if you own real estate. Rents are fantastic. But I think I should defer to you, but all the property owners think their place is worth this, and buyers think it's worth this. And that's one of the reasons that there's not as much volume as there used to be. If somebody's place sold down to someone somebody's neighbor sold a place down the street for $980,000 in March of it's March of 2017, I think, was before the new rules came in about foreign taxes, etc. So Buddy's neighbor down the street sold for $984,000, and he lists his price, and he's listing at $899,000, thinking he's going to get $1.1 million. I mean, now we go old school, right? They take it off the market and they list it at $1.2 million, and it sits. Like there's really seems to be. Do you agree? Like homeowners think their place is worth this, and
Yeah, of course.
and I guess that's always the case.
Yeah.
But it's maybe just a little more real right now, that delta between the parties. So glad you brought your dog with you.
I'm sorry if he cried.
Not at all.
Okay. I think that people are always comparing it to 2017, and I say take 2017 out of the game and go back to 2016 and look at that growth line. Just 2017 was.
It's such a balancing act for you as realtors trying to get the listing and managing expectations. And the bottom line is, the market's not going to lie. The place is worth what someone's prepared to pay for it. Let's make that happen as quickly and let's try and make that number as big as possible. Like, the market's not going to lie. It's going to sell for what it sells for. Maybe you can be creative and say, hey, let's hold off. There's two places for sale that are very similar. So let's hold off for 6 weeks or 8 weeks, see what happens there versus flood the market with another semi on Maria Street. And definitely you can help them put some lipstick on the place to help get that number higher. But the market is the market.
I came late, so what's the percentage for a first-time home buyer down payment?
It's no different for a first-time home buyer than anyone else.
Oh, okay.
So the minimum down payment, well, is there a Joe in the room? Can you answer the question?
Minimum down payment
Yes.
for under $1 million is 5%. Over $1 million is
10%.
roughly 10%.
Yeah.
Anybody else?
So it's
Somebody-
5% up to 500,000.
Yes.
And then 75,000 if it's $1 million.
Yeah.
That's true.
That's what you said.
Yep, that's true. But
Yeah.
let's say it's minimum 5% up to 500,
Yeah.
and then it's we can say up to 10%. So it's 5% on the
Scale.
first 500, and then 10% on the extra amount.
So they can get
But-
money out of the RSP then for the down payment?
Yes,
Up to how much?
even if they're not a first-time home buyer,
Yeah, up to how much?
25,000 tax-free.
25,000.
Right. Now, not everybody can participate more than once. It depends on, there's 3 or 4 things that you have to. Sorry to put you on the spot, Joe. But you failed. So minimum down payment, 5% on the first 500, then 10% after that. And once you get over $1 million, it's 20% at least.
So if it's 600, then it's up to the extra 100 is 10%?
Yeah.
Okay.
Yeah,
Yeah.
so it would be 35,000.
Yeah, that's fine.
It's going to be a short quiz here just before you leave, so.
So the purchasing power used to be 600, is now 450 for somebody, based on today's rules.
Yeah, that's kind of it. It's like,
I mean, they
that's
lost
a
almost
75%.
20%.
You can qualify for 75% today compared to 2 years ago.
Okay,
So
instead of 80.
instead of 100. So when Joe could qualify for 600
Yeah.
2 years ago, Joe now only qualifies for 450.
Yeah, that's what you're saying.
So it's like they can borrow only 75% of what they could borrow. We shouldn't use
Okay,
percentages
yeah,
because
I see,
yeah.
based on 100, yeah.
Do you have any program based only on down payment?
Um,
Big down payment and not
Yes.
very good interest?
Yes, so some lenders have like equity type deals where they don't look at income or credit, but you pay a premium for that.
How much, 100%?
Well, it depends on the scenario, it depends on the loan to value. Is it 350 down on $1 million? But and it depends on the credit. The pricing is so hard now. People call and say, what's your best 5-year rate? Every bank has 5-year rates fixed, depending on credit score, depending on loan to value.
It's what the discount is, I don't care. I mean, I want to know what my discount's going to be versus the
Yeah,
term.
but you want to know which 5-year rate you qualify for, because it depends on,
How they calculate it.
absolutely, and which box do you fit into? You know, like the biggest, the best we get. I'm sure for you, you get a referral and say, well, what's your commission? Well, how can you ask me what my commission is? You don't even know what I'm going to do for you. Like, and if that conversation doesn't turn around quickly, you probably want to move on to the next call.
Yeah.
Right? Because, or refer them to somebody in the office that you don't really care for. Right? A newer agent will chase that around all day long and then lose the deal. Like,
Right.
I feel like there's a question I didn't answer. Are you going to complain about me for putting you on the spot? So thank you again. I'm going to stick around for a bit if anybody has any specific deals they want to speak.
Thanks for your time.
Yeah, thanks so much. I appreciate it.